Hi, I'm Max Keiser. Welcome to the Keiser-Report. You know, markets don't kill economies. Banksters kill economies. Banksters rigging markets kill economies. Banksters creating fraudulent, so-called derivatives kill wealth and savings. Banksters shot down the entire fabric of our financial system through which we individual participants must operate. Stacy.
Max, we're going to go over some of these banksters and their markets and the puppet politicians they own destroying markets, because we've got a few of them in the headlines over the last few weeks, and we've not had time to cover them, but we're going to cover them right now. JP Morgan gets a big holiday gift from the SEC. So we did mention this a few times over the course of the Christmas once this new copper market was given approval for JP Morgan. But this article points out, in 1996, the world learned a Japanese firm had cornered the copper market. The company, Sumitomo, was fined $125 million for squeezing copper supplies and artificially inflating prices, at that point the largest penalty ever levied by a U.S. government agency. The Commodities Futures Trading Commission called this scheme one of the most serious worldwide manipulations. We've covered, of course, the speculation in various agricultural markets and stuff like that, but actually that's indirect speculation, because the investors are buying, say, agricultural futures. But 2 weeks ago, 3 weeks ago, the SEC, not the Commodities Futures Trading Commission, but the Securities and Exchange Commission, approved, they essentially legalized hoarding in the form of a controversial fund designed by JP Morgan Chase that for the first time will let investors buy shares backed by physical warehoused copper to use as a form of investment.
Well, you know, it's interesting the use of the word hoarding. Hoarders, because according to economists in America and the Obama administration, saving is a bad thing, because if one person's savings is another person's loss of spending, and that we need people to just spend, hoarding is bad. And yet the SEC has given the green light to Wall Street to hoard vital commodities. Why is Wall Street interested now in hoarding vital commodities? Is the day of the paper apocalypse upon us? Yes. Is the day of the 300-year high bull run in bonds upon us with a magnificent, spectacular burst in bond prices? Yes, that's baked into the cake for 2013. That's why they're hoarding things like copper, because they know that as inflation, hyperinflation, currency collapse rears its ugly head, JP Morgan wants to be there after having made money on totally destroying the system with derivatives. They want to repeat the trick by totally destroying the economy by hoarding commodities.
And remember, we've discussed this over and over, is that JP Morgan essentially is the U.S. Treasury. Now, the U.S. Treasury has deemed that China is not a currency manipulator. That's that's what they're saying publicly. But this could be a war, a financial war against China in a way, because China is the biggest user of copper. Now, the article points out that this scheme, the investors purchasing shares in JP Morgan's fund, won't be buying copper to use, but to store. The intricacies of the fund are complex, but its underlying rationale is straightforward. The more shares investors buy, the more copper is taken off the market. And the more copper that is taken off the market, theoretically, the more valuable the copper and the shares become. The Sumitomo trader who cornered the market in the 90s relied on the same essential strategy to artificially inflate worldwide copper prices. So remember, when you spoke to Mitch Firestein, he said that they basically, JP Morgan now had 27% of the copper market.
Yeah, well, you know, most of JP Morgan's hoarding going on happens right here in London under the auspices of Blythe Masters. And when you think of Blythe Masters, the first thing that comes to my mind is hoarding, and her attempt to corner the market in all these vital commodities while her bank simultaneously runs up this 300-year bubble high in bonds.
Yeah, okay, we're going to actually turn to Blythe Masters in a moment, but I want to point out that OPEC itself does not use the spot market to price their oil products, because they said that's open to manipulation. They use futures instead. So here you're allowing JP Morgan to enter this spot market, essentially the physical market, and rig copper prices. They now control 27% of the copper market with this new fund. And BlackRock is seeking approval of their fund, which will be twice as big as JP Morgan's in this. But Blythe Masters, however, let's turn to, almost 2 years ago, February 2011, when you spoke to Pierre Jovanovic of Jovanovic.com, who wrote the book Blythe Masters, and this is what he said then.
And she got her title of head of commodities. And since then, this is extremely interesting, because at least what you can see in this book is that what is interesting is not that the fact that she reinvented the credit default swap. What is interesting is that since 2007, she's buying commodities, she's buying agricultural foods, she's buying sugar. In 2007-8, she was already in Brazil, buying everywhere, you know, sugar, pork bellies, live cattle, and everything. And this is why, you know, the prices are going up. And today, you're seeing the results.
Yeah, well, Pierre Jovanovic is totally plugged into what's happening in the French banking system, and Societe Generale and BNP, of course, are totally integrated into the global financial terrorism network. And we know that Blythe Masters, and his book, Blythe Masters, which quotes me extensively in that book, by the way, as he 2 years ago, he said this was coming. The JP Morgan and these banks hoarding these commodities. That's why we've been telling people that when the bond bubble bursts and commodities enter a phase of hyperinflation, as was being telegraphed right now, those with gold and silver, which is a way for people to get in on the action today. Just like Blythe Masters wants to control 30% of the global copper market, the people of the world should be controlling the majority of the silver market, or the people of the world will find themselves even worse off in a couple of years than they are today.
Well, again, so where is this going? We're introducing it for copper. Why is Blythe Masters, as Pierre Jovanovic pointed out in that little clip I just showed, why are they accumulating agricultural products? She's been doing it, as he said, since 2007, 2008. They, of course, own the regulatory authorities, so they, of course, would have known that they're going to get approval. And this, by the way, the article points out that it's usually the Commodities Futures Trading Commission that would approve this sort of thing or not, because they know the commodities market, or allegedly they do. This went through the SEC because he's selling shares in these physical assets. So the Securities and Exchange Commission, which is far more bought off right there in the center of New York rather than over in Chicago, they're the ones that gave approval for this.
Well, yeah, because it's an exchange-traded fund, but it is a derivative. It's the claims of owner of BlackRock would have a senior claim to anyone who owns the shares in a copper exchange-traded fund. Same thing with the precious metals exchange-traded funds. That's why if you're buying precious metals, you wouldn't buy an ETF, because you're going to get paper in exchange for your shares. You're not going to get metal. And this is really interesting because we've gone full circle on the entire history of the financialization that's taken place in the global economy, starting in the late 70s, early 80s with the introduction of listed options in Chicago, which quickly became the market for listed financial futures and options in Chicago. So for the first time under Reagan, deregulation, you had the ability to trade treasury bill futures, currency futures. And that began the 25 to 30-year period of the financialization of the global economy, which made banks and like JP Morgan and Goldman Sachs and these other global banks trillions of dollars in profit. But now we're at the point of this bubble bursting. So these banks very cagily are going back and realizing that the whole thing's been a false from the beginning, and they're coming back and they're going to corner all the commodities now that the bubble is bursting for the next wave.
However, Max, this could pull in a lot of members to the Silver Liberation Army, because this article actually ties it to silver and gold and precious metals and how those markets are open to abuse by JP Morgan. More troubling is that the SEC's decision collapses the distinction between precious metals traditionally used for investment, like gold and silver, and metals and other goods that we consume in large quantities, like copper and corn. It signals to bankers that all goods are fair game for financial play, no matter how vital to our economy or our well-being. So the past few years, it's always been, oh, those silver bugs, those silver freaks, the conspiracy theorists, they think, oh, big deal, JP Morgan's rigging that market, it doesn't affect us. However, as they're saying, oh my God, now all of us are going to be subjected to this JP Morgan abuse.
Right. Those who argue that the silver and gold manipulation story is overplayed, you know, they had some ability to argue that point until the LIBOR scandal, which was a multi-hundred-trillion-dollar global scandal involving manipulation by Barclays and other banks that they admit to. There's no longer any debate about it. They said, yeah, also the Bank of England admitted to manipulating LIBOR. So if you manipulate LIBOR, you're manipulating the entire global commodity and futures trading infrastructure, which includes gold and silver, to manipulate them down to make paper assets look better. But I kind of disagree with this idea that, okay, we're going to turn all the commodities in the world into these highly manipulative exchange-traded funds and other products, and this is going to somehow cast a slightly different light on gold and silver. The gold and silver story as a return of gold and silver as the backing of the global economy, as the bond market collapses, has been in play now for 10 years and will become bigger, more visibly in play this year and the next year as people like the Hunt brothers back in the 70s tried to corner the silver market. They were shut down because they were in the futures business. Today, the Silver Liberation Army has the ability to corner the silver market and kill Blythe Masters, figuratively, of course.
Now, again, and finally on this story, Max, the SEC in their statement, when they looked at the London Metals Exchange, where the LME, where JP-Morgan will be storing this, 30% of the global copper supplies, they said that they don't see 30% of the supplies being taken off market will affect price. So here's the SEC openly saying there is no such thing as supply and demand in the price discovery mechanism.
It's not really about the control of the physical stocks of commodities, including copper, so much as the impending collapse in global bonds and the return of hyperinflation. That's really the bigger story here. And JP Morgan wants to be hedged against all the damage that they've created these past 10 years, because as the U.S. Treasury and U.K. Treasury market collapses 50, 60, 70%, and you have 5, 6, 7 million people in Britain suddenly homeless, they want to have the price of all the commodities like copper jump 50, 60, 70%. It doesn't mean the demand for those commodities has increased. It just means that against fiat money apocalypse that they engineered, those prices are going to be at those levels. This is all about a bond collapse and not really so much about cornering commodities. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
All right, stay tuned for the second half. A whole lot more for you here on the Keiser Report.
Deadly rivals for decades.
If you had 15,000 people killing each other in any other country, there would be diplomats, there would be mediators, it would go to the UN.
Self-imposed outcasts from society.
Am I going to attack myself? Am I going to attack my brother? You understand? Am I going to attack my own image in the mirror? Or am I going to eventually attack the cause of my anger and my frustration?
Well, welcome to the Terror Dome.
Two of the most violent gangs in U.S. history.
It's just the whole motto, kill or be killed.
With colors matching the national flag.
But this country uses violence whenever it chooses, and then it legitimizes the violence.
They are Made in America on RT.
Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to David Hales. He's a senior research fellow at the Open University in the UK. David Hales, welcome to the Keiser Report.
Hi, it's good to be on, Max. Good to see you.
Now, on your bio at tribler.org, you write, I think that current P2P file-sharing systems like BitTorrent are essentially global economic experiments from which we may observe new economic phenomena. So here we have P2P file swapping, which is relatively new, which is known from BitTorrent and what's happening post-Napster era. And you also mentioned Bitcoin. Okay, so bring all this together.
Okay, well, what's interesting about the way that BitTorrent research has been going, specifically in the research domain, is that because they're massive deployed systems, I mean, BitTorrent is the largest, possibly the largest deployed system there's ever been. Measurements can be made because it's an open system, so anybody can go in and measure what's going on. Lots of data can be collected, and that data can be used to understand the kinds of economic transactions that are going on within BitTorrent. Now, you might think that BitTorrent's not an economic system, but in some sense it is, because BitTorrent depends on the exchange of data, block for block. Now, the way that BitTorrent works is it uses a tit-for-tat mechanism, which is essentially a I'll scratch your back if you scratch mine kind of approach. This is still a very, if you like, primitive form of economic exchange. So by measuring what's going on in BitTorrent communities, and different communities have different kinds of exchange relationships, you can actually understand the fundamental micro-interactions, these fundamental economic micro-interactions that are leading to, say, the positive outcomes of BitTorrent communities, which is everybody helping each other to achieve their common goal, which is the sharing of files. Well, the current state of the BitTorrent ecosystem seems to be reminiscent of what we had before copyright. Before copyright law came into existence, you had this open, free exchange of information, data, and ideas, and you could argue, I suppose, going back before that, you know, it almost mimics the whole evolution of DNA. DNA is a strand of information that meets up with new strands of information, and you create this evolutionary process. But then there's something called copyright, and the copyright lobbyists and the copyright, some may even call it a cartel, that are extremely vigorous in their protection of their copyrights, which seems to be, thanks to copyright extension laws, becoming perpetual copyright. That's the goal of Hollywood, to have things under copyright forever, essentially. So how does that work with this open system, and how is that conflict going to be resolved? Well, I think you're right in what you say. Interestingly, as you say, when printing was originally invented, a lot of the original printers were accused of piracy, as well as promoting like subversive ideas. So there's a very similar thing going on. I think that the interesting thing about the way that BitTorrent is changing this debate is that it's an incredibly, because it's a fully decentralized distributed system, it's a peer-to-peer system, it's incredibly robust, so it's very difficult to shut down. So it's not the case that you can simply go to one website or go to one organization and use legal sanctions on them, because it's fully distributed. As long as users are running the BitTorrent client, then in fact the actual control of copyright cartels, as you call them, is not quite possible. So this is why you see this kind of ongoing battle between these kinds of centralized organizations that own copyright and the distributed users who are trying to share information. Okay, now that ideology, if you will, that you're talking about, the BitTorrent information wants to be free ideology, was expressed in its purest form, I would say, with WikiLeaks. And WikiLeaks used the P2P networks to take journalism to a new evolutionary plateau. But they met the financial blockade of Visa, MasterCard, and PayPal, which shut them down. So that brings me to Bitcoin, which, if I'm not mistaken, is a BitTorrent approach to currency. It's decentralized, and it's virtually impossible to do what they did to Visa and MasterCard by imposing a financial blockade. Your thoughts? Yeah, it's interesting that you get a peer-to-peer solution to the attempt to shut down peer-to-peer publishing. So as you say, WikiLeaks
some of the infrastructure there depends on a certain peer-to-peer infrastructure, but also, as you say, there's a certain ideology here of information wants to be free. And this links back to when we were talking about printers and printing. If you do your research and look at the earliest printers, as well as being accused of being pirates and pirating novels and whatnot, they were also publishing subversive pamphlets, information that would embarrass the government, etc. So essentially, if centralized institutions, and I believe it's the case, it's my opinion, that because of this technology and other developments, centralized institutions are losing their control or potential control over the information that people share. As that control starts to loosen, I think you'll increasingly see the rise of these distributed attempts to share information, whether that's for political purposes, to promote democracy, say, as in WikiLeaks, or whether that's for other kinds of purposes of sharing information that centralized entities don't want you to share, including financial services, where essentially what financial services are information sharing systems with degrees of trust built on top of that.
All right, now you talked about P2P systems, and you talked about it in terms of being economic, and there being an economics involved, which is, to most eyes, hidden. The copyright cartel, as we are now calling them, they will argue that there is no economics whatsoever with peer-to-peer file sharing, that this is an attempt to overwrite all the laws of capitalism, of supply and demand with free P2P. However, if you look at sites like, well, Google, for example, here's a site that's a $100 billion plus company based on the free aggregation of information, which they organize through an algorithm and then sell to advertisers a piece of that organizing algorithm. So there's the economics of free turned into a multi-$100 billion enterprise. Talk a little bit more about the economics of P2P and why the Hollywood cartel is getting that completely wrong and, in fact, putting out a message that is the opposite of the truth.
Well, I think that this all depends on the view you have of capitalism or the way that economic systems are organized. I mean, historically, economic systems change over time. They're always changing. Change is the norm. And of course, people have probably heard before this idea of a disruptive change or disruptive technology. Now, at any given point in time, of course, there will be successful entities who are doing very well in the current economic system. And one of the incentives that those organizations have is to reduce or restrict disruptive change, because by definition disruptive could affect and often does affect their dominant position. So the way I see a movement to a more distributed kind of economics approach is it's a disruptive innovation which challenges more centralized, more government regulation-based, current government regulation-based approaches. And I mean, you know, in some sense, if you go back to the disruption from a feudal system to a capitalist system, in a way, capitalism is, in a textbook sense, supposed to be a fully distributed system. It's the idea that individuals and groups can actually exchange freely in order to satisfy their needs. And therefore, in some sense, there's a kind of perpetual battle, it seems, if you look at kind of history or in IT, and like you start off with mainframes, and then you had PCs, and now you have the cloud, and then you have P2P, that also in economics there's a constant tension between a tension for centralized control, which has its benefits, let's be clear about that, and also a more distributed approach. And there's always a battle going. It's a constant arms race.
All right, you talk about the transition from feudalism to capitalism. Let's talk about the year 1694. Clearly a pivotal year in that transition. This is the year the Bank of England was established.
Yes.
Anthony Hardane, who's a senior executive at the Bank of England, recently said that peer-to-peer lending boom that's going on with sites out there that are making it possible for people to lend to each other, bypassing the banks on the high street, could make banks obsolete, is what Anthony Haldane
said.
What this shows to me is that sometimes we have a tendency, if we're on the P2P side of things, to see centralized entities as monolithic in the sense that everybody who's involved in them follows a certain kind of ideology or way of thinking about things. But actually there are, within all these centralized institutions, quite forward-thinking people, you know, who are very smart and know what's going on and are looking towards how perhaps the future can emerge without maybe some sort of constant just stalemate.
No, but there is a tendency to centralize amongst one group in a population, and then there is a tendency to decentralize by another group in the population. And you talk about this in terms of a natural tension that goes on. And it seems hard-coded to go back to the original algorithm that drives us, DNA, between having people in the group that are both for control and people who are for chaos. And the mix of these two elements somehow produces, you know, you might call it civilization, not to get too highfalutin, but there is our reality, our present reality. To follow up on this kind of wheel of chaos and control ever spinning, there is, of course, now a move to regulate P2P lending to some degree and to take it completely away from being out there and unregulated. Is that a good or a bad thing? It sounds like it's a typical progression of things.
Well, I think the answer to all those kinds of questions, when people say, is regulation good or bad, the question is, what is the regulation? I think that some level of recognition and regulation that creates more confidence in these systems could be good if it's written in the right way. Of course, there's another side to this, which I think you're hinting at there, which is that, you know, this could end up being a way of co-opting or of absorbing this into an existing centralized system.
Because I'm thinking about, for example, microfinancing, which started out in a very much a decentralized, off-the-grid entrepreneurial venture in Bangladesh, which was doing a lot of good, and then it got absorbed by the banksters here in London and Wall Street, and it turned very bad. Yeah. Very quickly.
Yes. I mean, well, I agree that things can go wrong. As I said, depends. And I mean, there's another danger. I'm not an expert in the P2P lending and the current government relationship there, but I know that recently the government earmarked, I think it was about £100 million in order to promote P2P lending. Now, there's a danger there, which is if you become dependent or even partially influenced by certain kinds of preferential treatment by a government entity, then that can influence how things operate. I mean, as you say, the basic ideology here is to have as much individual freedom and entrepreneurial behaviour, if you like, at the lowest possible level.
Okay, David Hales, thanks so much for being on the Keiser Report.
Thank you, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, David Hales of the Open University here in the UK. If you'd like to get in touch with us, you can do so via tweet or twit at Keiser Report or facebook.com/Keiser Report. Until next time, Max Keiser saying bye, y'all.